We're talking about all the stocks that Warren Buffett purchased in the third quarter, 10 stocks in total. In the last video, we did part one. We ran through 5 of those. So if you haven't seen that video, make sure you check it out up here or down below on a pinned comment. But today we're doing part 2 and we're going to do the remaining 5 stocks. And these are actually the larger positions. These are the larger stocks that he purchased in the third quarter. And I'm going to run through every single one of them. And I'm going to give you my opinion on each one. And I'll let you know if I'd even consider buying them myself. So it should be a lot of fun. I hope you guys enjoyed the video. Let's get started. What's up, everyone? My name is Ale. Welcome back to my world of stocks. Got 5 stocks to run through. Let's not waste any time. Let's jump straight into it. Okay, now just a quick reminder, I'll be showing you the stock that Buffett and Berkshire Hathaway purchased, the estimated price that they paid based on GuruFocus.com, how much the position increased from the previous quarter, or if it's just a brand new position for him, how high it ranks in the portfolio in terms of size, and finally, how much of that company Berkshire Hathaway now owns after this most recent purchase, along with, of course, my quick opinion on each one of these. Okay, so coming in at stock number 5, we're going to count down here from the largest to smallest. We've got Merck at around $82 a share. It's another brand new pharmaceutical stock for him, a biotech company. Yesterday, of course, we talked about how he also purchased Pfizer, which I am a fan of myself. But this one was a pretty sizable purchase here, as it's already the 18th largest stock in the portfolio, and he now owns just about 1% of the company, valued at around $1.8 billion. And this one does look pretty good to me also. Merck is mostly known for their blockbuster cancer drug called Keytruda, which global data predicts will be the best-selling drug by 2023 and bring in over $22 billion in revenue by 2025. That's an insane amount if it ends up being true. For context, that's about half of all the sales that Merck brought in just last year. And the good thing for Merck is that this particular drug doesn't lose patent protection until many years from now in 2028. So there's a lot of time there for them to collect very large sales from it. Meanwhile, no key brands are either expected to lose protection until at least 2022, and Merck is already working on a robust pipeline for the future that includes various treatments for cancers, viruses, and even the pepperoni. Currently, the stock is up about 50% over the past 5 years, but even at these levels, they're still yielding over 3% on their dividends. So I really like this pick, and if I didn't already have a lot of biotech exposure through AbbVie and Pfizer, I'd probably be willing to buy this stock myself too. It is one that I think was a good one here. All right, moving on to stock number 4, we've got yet another biotech, this time in Bristol Myers Squibb, which Buffett picked up at around $60 a share. And like the other biotechs, this one is also a brand new position for him, so it really seems like he felt that there was a great buying opportunity in the sector, which I have to agree with, especially back in the third quarter. A lot of these stocks were trading at pretty cheap prices and still kind of are. Now, this stock is already his 16th largest. He owns over 1% of the company, and it is valued at almost $2 billion. Now, Bristol Myers is particularly famous for their market leadership in areas of like cardiovascular, oncology, and immunology treatments, most of which have been fueled greatly by acquisitions like the gigantic one that they made last year in Celgene that was worth almost $75 billion. And that left them with ownership of at least 9 blockbuster drugs. Blockbuster meaning that they each bring in at least $1 billion in sales per year. And that also left them with a huge and high growth pipeline to go along with it when it's all kind of said and done. The result has largely been strong sales and huge profits over the years, but like much of the pharmaceutical industry, that has been really kind of beaten down by Wall Street over fears of drug price reform. And Bristol Myers stock, as a result, has not performed very well over that time. In fact, It's actually negative over the past 5 years, but some would argue that this has now left them with a very cheap valuation as well as a solid dividend that yields almost 3%. So while I'm not personally buying the stock myself, I do still think that it was a solid pickup by Buffett, and I think he'll probably do pretty well on it over time. Okay, now moving on to a biotech that I do actually already own myself. This is, and it's actually one of my largest dividend stocks. That's going to be AbbVie at stock number 3. And no surprise here, Buffett's biotech shopping spree just really wouldn't be complete without adding this popular stock to his portfolio at around $94 a share. And despite it being yet another brand new stock for him, it already ranks as the 14th largest in his portfolio, accounting for over 1% of the company's outstanding shares and is valued at over $2 billion. And as you might expect, I obviously like this one. This is a stock that I do own myself, but it is admittedly a bit high right now, so I'll probably be waiting for a pullback before adding more to my position. But hey, even at these levels, it's actually still a bit lower than the highs that they saw back in early 2018 because of the loss of patent protection for their number one best-selling drug in Humira. But you know what? They've actually now addressed this issue pretty well by doing a couple things. They made a gigantic acquisition last year of Allergan that had lowered their revenue dependence of it to just 40% that year, and they've been continuously working on new drugs that have lowered that dependence even more with a gigantic pipeline of new products that should only accelerate the process even further in the future, as you can clearly see on this screenshot here that I'm showing you. Of course, the best thing about AbbVie, at least in my opinion, is that dividend, which still yields over 5% even at these higher levels, and it also carries a very high growth rate of over 20%, although I do expect that growth rate to come down dramatically as that dividend is already pretty high. Either way though, despite all these positives, the stock is still trading significantly lower than the sector, so I gotta say that I definitely agree with Buffett's purchase here, especially in that third quarter where it was a little cheaper. I already own a large position myself, so that's why I'll personally be waiting for another dip before adding any more. But yeah, even here, it's still looking pretty attractive. So we'll just kind of see what happens. Okay, now we're down to the final two stocks of the list. And coming in at stock number 2, we've got General Motors, ticker symbol GM. And finally, we have a stock here that is not a brand new position and not of like a biotech pharmaceutical. In fact, it's actually an already very large one that he decided to add even more to this quarter. Estimated share price was at $28. It was an increase of around 7% from the previous quarter, and this one is in the top 10 largest stocks of the portfolio, coming in at number 9, equating to over 5% of General Motors ownership and valued at $3.5 billion. And this one I mostly have mixed feelings on, as performance for the business and the stock have been kind of all over the place. Over the past 5 years, GM stock was mostly flat up until this year, where they went through a major crash and then a very large recovery from the bottom. The reason for the crash was mostly due to the global health crisis that, I mean, just call it what it is. It crashed it crashed the world economy, which likely means less money in people's pockets and therefore lower automobile sales, which is something that GM was already struggling with even before this year. And if we zoom out to the past decade, we can see that even long-term investors have likely not really made a whole lot of money on the stock unless you take the dividends into account, but even that was also cut this year. They actually cut their dividend this year. And as you would expect, given the volatile stock performance, sales for the company have been kind of all over the place too. Sales crashed by 13% in 2017, barely rebounded by 1% in 2018, but then fell again by another 7% in 2019, and are expected to crash yet again this year by another 12% before finally seeing some decent growth next year of 13%. But even then, they'll still be around $30 billion lower than where they were at all the way back in 2016. So why then has the stock shot up by so much these past few months? Well, aside from the fact that the broader market in general was rallying higher and, in my opinion, just kind of lifting up most stocks along with it, GM is also trying to turn their business around by investing heavily in electrification, and I think that really got investors excited. Recent announcements include the development of their own battery technology, over 40% of all new launches in China being battery electric, and even some more marketable, kind of buzzworthy vehicles like the new electric Hummer to get them more attention. I like what they're doing, and I do believe that they can turn things around if management is able to execute effectively. So I understand why Buffett added to his position on this one, but at these higher prices and without the dividend, I just think that there's better options out there. And given that I already own Tesla myself, I just don't see the need to pick up another automotive stock for my portfolio. So I'll personally be staying away from this one myself. Okay, and that brings us to the final stock on the list, and that's stock number one. That's going to be Bank of America, ticker symbol BAC, which he purchased at around $25 a share. It was an increase of 9% to his already existing gigantic position, which ranks number 2 in his entire portfolio, as he now owns almost 12% of the company, valued at a whopping close to $30 billion. And no surprise here, we all know that Buffett loves bank stocks, although he actually sold giant chunks of JP Morgan and Wells Fargo, and I think maybe like one or two other kind of bank related stocks too. But he seems to still love his Bank of America shares. And I gotta say, I guess it maybe makes some sense from certain perspectives. Like, for example, if you believe that the American economy is going to rebound and recover from this global health crisis and the recession and all that stuff, then I suppose picking up some Bank of America shares at these prices would make sense. The stock is still down about 24% this year, sitting right around the midpoint of their 52-week range, and that's resulted in a pretty low forward PE ratio of less than 13 and a dividend yield of over 2.6%. Still, bank stocks are not looking so attractive to me right now. The economy is still destroyed. Politicians keep talking about even more lockdowns possibly, and I'd be very surprised if interest rates even start climbing back up anytime soon, which is, we all know, is kind of needed by banks to maintain their profit margins. Meanwhile, Bank of America's revenue stalled last year, and it's expected to drop by over 6% this year and then still be in the red even by 2021. Again, if you're thinking very long term, then I can understand why you'd want to buy into the weakness, but even then, I just can't really wrap my head around why Warren Buffett would sell his JP Morgan stock and buy more Bank of America. That's a move that I'd have to disagree with myself. JPM, and full disclosure, I do own JP Morgan stock myself, so maybe I'm a little biased, but JPM consistently brings in more sales, over 30 billion more in the past year. They bring in more profits, around 7 billion more in the past year. They pay a larger dividend at a 3.1% yield versus 2.7%, and yet they still trade for about the same valuation on a forward PE ratio basis. So personally, I gotta say, I'm not the biggest fan of bank stocks. The only one that I'm willing to own myself is JP Morgan. I just feel like maybe it's a little safer. It's a very well run kind of bank. But you know what? Maybe Warren Buffett sees something that I'm not seeing, and I'll have to give it to him. He's obviously way smarter than I am, so maybe he's making the right calls selling Chase and picking up more Bank of America. But I don't know. I mean, that's just something that I'm not a big fan of. I personally think that JP Morgan Chase is the better stock, but I don't know. I guess we'll see what happens. I'm not personally very attracted to Bank of America myself. Anyway, that does it for the list. Personally, if I had to rank all of these stocks from best to worst, I think I'd go AbbVie, Merck, Bristol Myers. Those three seem like pretty good picks. I like all three of those. I agree with Buffett picking those up, and they seem like good long-term investments. So I like all three of those. Then after that, General Motors, I guess in fourth place. That one, a little bit of like a turnaround spec play. I can see why some people would want to kind of bet on it, but I just think there's better, safer options out there. I'm just not the biggest fan. And then in last place, I think I would put Bank of America. Just a little bit too boring of a stock for me, a little bit too boring of a company. And the economy heavily destroyed right now. I just think it's going to be a while until they can really kind of turn things around, but we'll see. Anyway, those are just my quick thoughts. I'd love to hear what you guys have to say down below. Do you agree with anything I said today? Anything you want to add? If you have any suggestions for other videos, let me know as well. But if you enjoyed the video, make sure you hit that like button. Really helps the channel, means a lot to me. Thank you for all the support, guys. I'll catch you in the next one. Take care. Bye-bye.